All right, welcome to Talk Tickers. Today we're jumping straight into the Q3 2025 earnings for Aquestive Therapeutics, ticker AQST. And let me tell you, the headline numbers they just put up, they are not the real story here, not even close.
See, the way we're looking at this was the final setup quarter. This is the last quiet moment, the calm before the storm of what is easily the single biggest catalyst in this company's entire history. Everything that just happened is really just the supporting act for a massive event right around the corner. Now, if you just glanced at the headlines, you might think, a bit of a disappointment. And you'd be right, kinda. Aquestive did miss what the analysts were expecting on both revenue and on earnings. But, as you know, the details are where the real story is. So, on the bottom line, they reported a GAAP EPS loss of 14 cents a share. Wall Street was looking for a 13-cent loss, so that's a 1 penny miss. Not a disaster by any means, but yeah, a miss is a miss. And then on the top line, the revenue, the miss was even smaller. They brought in $12.8 million, which was just about $100,000 shy of what everyone was expecting. So you're probably asking, okay, a miss on both lines, why did the stock actually tick up on this news? Well, this is why. Context is everything. The reported numbers show a year-over-year decline, which looks bad. But if you strip out a one-time payment they got last year, the core business revenue actually grew by 4%. That tells you the underlying business is stable and even growing a little. It's healthy. And that brings us to the real story. This quarter was never about hitting a number or squeezing out a tiny profit. No, this was about loading the cannon. It was a deliberate, aggressive investment to prepare for the launch of what they believe is a blockbuster drug, Anaphylm. And you can see this strategic pivot clear as day right here. Look at the spending shift. R&D spending is coming down, right? That's because the big, expensive trials are finishing up. But look at SG&A. That's your sales, general, and admin costs. It's spiked up to $15.3 million. That is almost entirely them spending money to get ready for the Anaphylm launch. We're talking hiring sales folks, building out their medical teams, getting in front of insurance companies, all that good stuff. And the CEO, Dan Barber, he basically put it this bluntly on the call. He said, simply put, we are ready to go. The message to Wall Street was crystal clear. The marketing's done, the supply chain is ready, the teams are in the field, all systems are go. They're just waiting for the green light from the FDA. And they absolutely have the money to pull it off. They just raised $85 million in equity and got another $75 million credit line specifically for the launch. That gives them a war chest of over $129 million in cash. That is a ton of breathing room, a clear financial runway that gets them through the launch and well into 2027. So all of this, the spending, the hiring, the fundraising, it's all pointing to one single moment, the main event. And that is the FDA's upcoming decision on Anaphylm, which is their needle-free epinephrine film for treating severe allergic reactions. All right, so you're going to want to circle these dates on your calendar. January 31st, 2026. That's the PDUFA date. That's the FDA's D-Day, their deadline to approve the drug or not. If it's a yes, the company is ready to launch in the US almost immediately in that first quarter, and then they'll file in Canada shortly after. Now, what's really interesting is that the path to that decision looks more and more de-risked. The FDA decided they don't need to hold a big public advisory meeting, which, is often a very positive sign. They've also confirmed they're on track for that January date. Add in good news from Canada, and management just shrugging off a competitor's legal challenge, and the whole regulatory picture looks pretty solid. And if you're wondering if doctors will even want this thing, well, take a look at this. The company did an internal survey. They sent mock-ups of their film and a competitor's nasal spray to 35 clinicians. The results? Well, they were a blowout. 33 preferred the film, 33 to 1. That is an overwhelming preference, and it suggests they could have a real winner on their hands if they get to market. So, let's put it all together. What does this all mean for the stock and for the next quarter? Let's synthesize all this into our forward-looking thesis and our official rating for AQST. Moving forward, it's all about these key events. First and foremost is that huge binary yes or no decision from the FDA. If it's a yes, all eyes are going to shift immediately to the launch. How many prescriptions are they writing? Are insurance companies covering it? Beyond that, we'll be watching for news out of Europe and any progress on their earlier stage drug for alopecia. So, taking everything into account, our official rating on Aquestive Therapeutics is outperform. The Q3 miss was just noise.
The real signal is this incredibly compelling de-risk setup into a company-transforming event. The risk-reward profile heading into that January 31st decision just looks very, very favorable. And hey, don't just take our word for it. After the call, analysts over at Piper Sandler reiterated their top rating and jacked up their price target from $5 all the way to $8. And the reasoning was exactly this: the compelling setup for the Anaphylm launch. Okay, so with a setup this unique and this explosive, how might someone actually think about trading it?
And before we go any further, here's our usual but very important disclaimer. This is for informational and educational purposes only. This is not financial advice.
The thesis is simple. This stock is going to move, and move big, around that January 31st date. An approval, the stock could absolutely soar. A rejection, it's going to hurt and hurt badly. So to play that expected volatility, one potential strategy is what's called a long straddle. This involves buying both a call option and a put option at the same price with an expiration date after the FDA's decision. The goal isn't to guess the direction, but to profit from a massive move in either direction that's bigger than what you paid for the options. And that really leaves us with the big multi-million-dollar question. This FDA decision is so much more than just one product approval. This is the moment that could pivot Aquestive's entire identity, transforming it from a drug delivery technology company into a full-blown commercial-stage pharma powerhouse. This is definitely one to keep on the radar. Thanks for tuning in to Talk Tickers. And one last time, this is not financial advice.